Alright, continuing this VPA series in the Discord, we are going to do supports and resistances on this one. So this one is going to be on supports and resistances using the VPA theory, volume price analysis. So in this section, we're going to talk about the emotions that come in the markets, okay? Emotions of really the public and the market makers. So let's talk about it. Supports and resistances. The way we talk about is the walls, the floors of support. I like this saying, this meaning. The floor of support is the bottoms, and the ceilings of resistance, tops. I don't care for the walls, and I don't care for the roof that much, because the ceiling and the top, that's how Gans does it anyway. So check this out. This is statistics. 30% of the market is 30% of the time the market is trending. It's going upwards in a trend, but then 70% is going sideways 70% of the time. So same thing on a downtrend. It goes down 30%, then trends 70% of the time sideways. Okay, so you're gonna see this range a lot of times, about 70% of the time. Like right now, we're ranging on BTC on a lower time frame. So this is called, that's why I like the daily charts and the weekly sometimes. Shows you a better trend a lot of times. So the support and resistance is ceiling of price action. This is top, 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 bottom, 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 right? Floor of price action. Support, support, support. The resistance, supply selling. And so eventually it'll break out. Usually there's not 4 of them, to be honest though. But usually on the 4th time, probably on this time, it'll break out. But here we had 1, 2, 3, 4. And if it does bounce on the 4th, it's usually a good buy. So I think she overdid it in this picture, but you know, so be it. It's just to show you the point. The buyers are happily and hopefully for the floor support to hold. This floor of support is usually it's a Fibonacci range, or is a previous support from a micro trend, a macro trend. So the buyers are basically, they're hoping for higher prices and to accumulate the supply at the bottom. So they're absorbing, and then they're hoping for higher prices. But when they see a profit, they're hopeful, and their emotions of greed and fear kicks in. It touches the ceiling, right? So once it starts touching the ceiling, they either, sometimes they buy more, right? A lot of traders are going to buy more, and then so it comes back down, and once it comes back to their break-even price, they sell. And that's why it's like traders' fears and emotions. So we're going to actually get into that in the next picture. Let's go there now. So yeah, they see a profit, they're hopeful, and then the emotion of greed and fear kicks in. This is what we're talking about. So it touches the ceiling of resistance, keep looking, holding, make a profit, overhead, supply. So that's what causes supply, guys. It's traders just being trapped in bad positions. So look, they buy right here on greed. They're over leveraged. It comes back down. They're like, oh no, now they're afraid. It comes back up. They sell on fear, and they are pleased to get out on at a small loss. Okay, so this is the supply selling, the reason why supply is selling. So people are basically trapped selling. The psychology again of the markets. Okay, and then the cycle then repeats with the new buyers. So new buyers buy the top, comes back down. They can either sell it on fear, or they can hold it, continue to hold it, and then sell it back here for break even, which causes the market to come back down. Excuse me. And then the cycle repeats, basically up and down, ping pong. Buy on greed, and then they sell it on fear at the break-even price, and that's what causes that resistance, the wall. Same thing in a bullish trend, or a bearish trend, sorry. At the bottom of a trend, these guys sell at the bottom, or they buy. Yeah, no, they sell because they want to short, right? They want to short, they want to make money. Comes up so high, they're very afraid that they have to take a loss. They take their loss at break even, which causes a buying demand, strong support. Now there's a double bottom here, so in the triple bottom, same thing happens. These guys sell on the greed, right? Sell on greed, and then they buy it here to take their profits, and then here they hold because they're gonna. Right here, usually it does break out, but this in this picture it didn't, and then came back down. So they buy again, cycle repeats, and they until it breaks out on one side or the other. So Gans rule is basically that previous tops, ceilings of resistance become bottoms, floors of support. Now this one's something that you kind of want to definitely print out, probably repeat it every single day and understand it, because it's kind of hard to explain the words, but in pictures, if you can print a picture in your mind or use this picture right here that I'm about to show you in the market, because it's a good rule. It's a good rule that's going to help you get in and out at the proper times. Like this is a tradable VPA setup. Another one right here. So previous tops. This is a previous top. This is a previous top. This is a previous top, right? Ceilings of resistance. This is a ceiling of resistance. So once broken, this is broken, will become a floor of support. This one didn't really react at all, but it's just an example, really. Like, for example, Bitcoin, if I pull this one up, it didn't actually have support at the top. The ceiling of resistance becomes bottoms, right? But we did have a huge support. Like right here, did we find any support? Nah, because we broke right through it. That was a huge loss. But for some of these guys, I mean, look at this candle, right? About 33, 34%. But it did hit all the way to the bottom of the range. So the rule is that previous floors or ceilings will become supports, next supports. Okay, we also have Fibonacci and stuff like that we're going to go through in the next series called the MM. This one's going to be really interesting, so stay tuned for that. The main thing that I can say here, VPA, to wrap it up, I mean, guys, this took me probably hundreds of hours to read and digest this information, so you guys are getting it in maybe minutes, sessions, and hourly sessions. So the only thing I can really ask for you is try to understand it, meditate on the information, try to read it for yourself, or try to understand the concepts behind it, because this is what I did here. I just basically broke down the book in terms of concepts, just like for Elliott wave theory. I have many books of Elliott wave theories, breaking down the concepts at the finest level, right? So this is the floor support. The previous bottoms right here becomes floors of supports, become tops. Previous floors of support, this is a floor of support, becomes tops. So if the market was to go back upwards here, it would find a top right here. Okay. So the concepts of market makers shaking out the weak hands happens in times of fear of panic. These times that weak hands will sell into strong hands, the market makers. The market makers will cause fear by breaking support resistances, causing fear and accumulating all of the supply from the weaker hands. This is like a stop hunt. They do this because they need to know how much supply to absorb, testing theory, before they move the price higher, right? Testing. So they break low prices to see how much supply is actually in the market and to accumulate. So they'll break like right here just to see how much supply. You can see that was a huge supply. So they try to accumulate as much as possible at lowest price possible, and then range because they need to gain confidence in the market, and then they'll trend it. So they don't want to run into supply later down the road. So they will absorb the supply now by causing fear in the market, by breaking support and resistance before continuing up, so that the public basically sells to them at low levels. So this is their insurance. And also read the lesson again in testing pattern. So that's going to be the last video that we covered there, the other one right here. So That's really all I wanted to say for this section. It's going to be fear and greed patterns of the ranges. So where at the top they'll buy on the greed, okay, and then they'll sell break even on the fear, causing this what do we call it, a ceiling of price action. So this is a ceiling of price action. Once it's broken and it's trends, it can come back down, it'll find support. So previous ceilings becomes floors, right? And then previous floors, if they break the floor, come back down and comes back up, this becomes tops. So previous floors become tops, and it comes back down. So yeah, that's all I had to say about this video. Hope you guys like and subscribe and also share this knowledge. Peace.